All right. Ready to jump into the world of housing finance in India?
Sounds good to me.
We're going to be looking at LIC Housing Finance Limited,
Okay.
specifically their second quarter performance for fiscal year 2025.
All right.
We've got a pretty good stack of documents for this one. We've got their press release,
Mhm.
we've got the detailed financials, and then we've even got the investor presentation.
Wow. Lots to dig into.
Yeah, so hopefully we can kind of synthesize it all down,
Sounds like a plan.
make it understandable for everyone.
Yeah, because these financials can be pretty dense.
Yeah, for sure. For sure. So I think it makes sense to start with just a high-level overview. What is LIC Housing Finance all about?
Sure. So LIC Housing Finance is a major player in India. They've been around for 35 years.
Okay.
And they've seen some pretty remarkable growth.
Yeah, and I mean, they just hit a pretty massive milestone, right?
They did. They just crossed ours 4,000 crore in profit this year.
Which is huge.
It's massive.
So how does that compare to kind of their historical performance? Like, are they consistently growing like this?
Yeah, so over the past 5 years, they've had a really impressive growth trajectory.
Okay.
Their profits, income, and loan portfolio have all seen substantial increases. Specifically, their profit has grown at a compound annual growth rate of 19%.
Wow.
Their income has grown at 8% annually, and their loan portfolio has also been keeping pace, growing at 8% annually.
Okay, so pretty consistent across the board there.
Exactly. Consistent upward trend.
Well, let's zero in on Q2 specifically. Did they manage to keep up this momentum?
They did. Profit after tax is up by a healthy 12% year over year,
Okay.
reaching Rs 1,328.89 crore.
Okay. All right.
And their revenue from operations also saw a nice increase, up 3% to Rs 6,926 crore.
Okay, so still continuing to grow there. What about loan disbursements? Are people still taking out loans? Is that market still hot?
It seems so. Loan disbursements are actually booming with a 12% jump to Rs 16,476 crore.
Okay.
So that definitely suggests strong demand for housing loans.
And it seems like their main business, or at least a large portion, is in those individual home loans.
Yeah, it makes up about 85% of their portfolio.
Okay, so is that what's driving all this growth in those disbursements?
That's where things get a little bit more interesting. So while individual home loans are their bread and butter, disbursements in that segment only increased by 4%.
Okay, so it's still growing.
It's healthy growth.
But where's that massive 12% coming from?
Yeah.
Like, what's making up that difference?
Project loans.
Okay.
Their project loan disbursements are actually up 223%.
223%. So it sounds like they're putting a lot of faith in like these big development projects.
Exactly. They're tying their wagon to the government's infrastructure push.
Yeah. Okay. So a little bit riskier maybe than those individual loans.
A little bit, but higher reward potentially as well.
Okay. And speaking of those individual home loans, something I noticed in the investor presentation is the average loan size has jumped quite a bit.
Yeah, that's something that really jumped out at me as well.
44%.
44% up to Rs 30 lakh.
So are people just getting more comfortable with taking out bigger loans? What's driving that?
Well, there could be a few factors at play here. One could be rising property prices. Could also be seeing larger loans taken out for maybe more premium properties or more spacious properties. It's also possible that there's a demographic shift happening where higher income borrowers are entering the market.
Looking for a little bit more space.
Exactly.
Yeah, okay, that makes sense. But if people are taking out these bigger loans, are they able to afford them?
It's a good question.
That seems like it could be a potential concern.
Yeah, and thankfully, the installment to net income ratio for new loans has remained relatively stable at 30%.
Okay.
So it seems like borrowers are able to manage these increased payments.
So they're not stretching themselves too thin.
It seems not.
Okay, so we talked about the types of loans and who's taking them out, but how are people actually applying for these loans? Are they going into branches? Are they doing it all online? What's the process look like?
It's interesting. They're doing things a little bit old school. Over 80% of their loans originate through their vast network of agents.
Wow, so they've really built up this network of people out in the field.
Exactly, and it's clearly working for them.
That's a pretty impressive feat. But, and I hate to be a downer here,
Uh-oh.
but something that kind of jumped out at me as a potential warning sign is their net interest income. So their NII is actually down year over year.
Okay, so For listeners who aren't familiar with the term net interest income, or NII.
It's basically the difference between what the company earns from interest on loans
Right.
and what they pay out on borrowed funds.
Exactly.
So if that's going down, that could mean potentially their profit margins on loans are shrinking.
Right.
And this could be due to several things. It could be increased competition.
From other lenders.
Yep. Or changes in the interest rate environment.
Mm.
This is something to be really concerned about.
It's something to keep an eye on, definitely.
Yeah.
What really matters is whether they can maintain a healthy net interest margin or NIM.
Okay, so break that down for me. What is NIM and why is it important?
So NM is essentially their efficiency rating. It tells us how effectively they're making money on each loan.
Okay, so if the NIM is good, they're still making a decent profit, even if that NII is down a little bit.
Exactly.
Okay, so what does their NIM look like?
Well, they've managed to maintain a NIM of 2.71%, so they are still making a decent profit.
That's good to hear. Okay, so they're making money, they're managing those interest rates, but what about risk? Are these loans going bad? Are people defaulting?
You're talking about non-performing assets, or NPAs.
Exactly, that's the term.
Right. So actually, they're doing quite well in managing their NPAs. Their stage 3 exposure at default, which is basically loans that are considered very likely to default, that's actually decreased to 3.06%.
Okay, so it went down from last year.
Yes, it was at 4.33% last year.
Okay, so their bad loans are going down.
Yes. So they're doing something right.
That's a good sign. But with those project loans, those seem pretty risky. How are they mitigating that risk? What are they doing to make sure those loans aren't going to go bad?
Well, they've been setting aside a robust ECL provision of Rs 5,458 crore, which is like a rainy day fund for potential loan losses.
Okay.
And they've also been making technical write-offs to kind of clean up their balance sheet.
Okay, getting rid of the really bad stuff.
Exactly.
So trying to stay ahead of
They're
it.
being proactive.
Okay, so they're being cautious, even though they are expanding into some of these newer markets.
Exactly. Balancing growth with caution.
That's good. But what does this all tell us about the bigger picture here? I mean, what does LIC Housing Finance's performance say about the overall Indian housing market and the economy as a whole?
Well, that's where things get really interesting. It really makes you think about the future of these traditional financial institutions like LIC Housing Finance.
Yeah, I mean, is this their last hurrah? Are they going to get overtaken by these new fintech companies?
That's the question, right? I mean, we're seeing fintech disrupting all sorts of financial services, including lending.
For sure.
They're tech savvy, they can process loans faster, offer more personalized experiences.
Yeah.
And they leverage data in ways that these traditional institutions are still kind of figuring out.
Yeah, it sounds like a real David and Goliath story brewing.
It does, doesn't it?
But these bigger companies, they've got those advantages. They have the brand recognition, the huge customer base, and they understand all the regulations, all the legal stuff.
Yeah, and they have access to capital.
Tons of it.
So it's not just about being the biggest or the fastest. It's about how effectively they can adapt and leverage their strengths.
And it seems like LIC Housing Finance is at least trying to do that.
They are.
They're making some efforts to modernize.
Yeah, their investor presentation actually highlighted a lot of their efforts to digitize processes, improve customer experience, and even explore partnerships with fintech companies.
So they're not just burying their heads in the sand.
No, they're trying to stay ahead of the curve.
So maybe it's not a winner-take-all situation.
Right. Maybe it's more of an ecosystem where traditional and fintech can coexist.
Yeah, or even collaborate.
Exactly. I mean, think about it. Traditional institutions like LIC Housing Finance, they can learn a lot from fintech about being agile and tech savvy,
Yeah.
while fintech can benefit from the experience and the resources and regulatory know-how of these established companies.
Yeah, it's kind of a win-win.
Mutually beneficial.
Okay, so how can LIC Housing Finance specifically make sure they stay competitive?
Well, they need to continue investing in that digital transformation, streamlining processes, improving their online platforms, focusing on the customer experience.
Yeah.
And they also need to be really proactive about managing these emerging risks, particularly in cybersecurity and data privacy.
Right, because that's a whole new can of worms that they've got to deal with.
Exactly. Can't leave yourself vulnerable.
And what about those partnerships you mentioned? How could partnering with these fintech companies actually benefit LIC Housing Finance?
It gives them access to all those technologies, those innovative solutions, without having to build everything in-house.
Okay.
It accelerates that transformation.
Yeah,
It helps them tap into new markets, new customer segments.
that makes sense.
Imagine what could happen if they partner with a company that specializes in AI-powered loan assessments.
Right.
That could be huge for them.
That could be a total game changer. It really is a moving target, right?
It is.
Trying to keep up with all this new technology.
It's constantly changing.
So these traditional financial institutions really need to embrace that change.
They do. They need to embrace innovation, experiment with these new ideas and technologies.
Otherwise, they're getting left behind.
Exactly.
It really is a fascinating time to be watching this all unfold.
It
I mean,
is.
we're seeing this fundamental shift
Yeah.
in how financial services are being delivered.
Yeah, and how they're consumed. I mean, you can manage your entire financial life on your smartphone now.
It's true.
Customers have more information, more choices than ever before.
And if you don't give them what they want,
They're going to go somewhere else.
they're going to leave you in the dust.
Exactly. It's a highly competitive market.
So LIC Housing Finance, they really have to stay ahead of the game.
They do. But thankfully, they've got that good foundation, strong financial performance, deep understanding of the market,
Yeah.
a commitment to risk management.
That's good to hear.
Yeah.
So it's not all doom and gloom,
No.
but it's not just about LIC Housing Finance either, right?
Right.
This is happening all over the world.
Absolutely. It's a global phenomenon. What's happening in India is just a microcosm of these bigger shifts.
Yeah.
We're seeing those lines between traditional finance and technology just blur
And it creates a lot of
and
opportunity.
challenges.
Yeah. But let's bring it back to LIC Housing Finance for a second. Their success, what does that tell us about the future of financial inclusion?
That's a great question. That's a really interesting question, and it's definitely relevant to our discussion today. I mean, LIC Housing Finance, they're playing a pretty important role in the Indian housing market.
Yeah, but are they really contributing to financial inclusion?
Well, to some extent, they are just by providing home loans.
Okay, so just by existing comps, they're helping people get access to financial services.
Right. For a lot of people, owning a home is like a stepping stone to financial stability, you know? It helps them build wealth, and they can use that to access other financial opportunities down the road.
Yeah, it gives them something to leverage.
Exactly.
Okay, so even if they're not like actively promoting financial inclusion, they're still making an impact.
Right. But it's not always easy for everyone in India to own a home.
Right. There are still barriers,
Yeah.
especially for people with lower incomes or in rural areas.
Exactly. And that's where the government steps in.
With those initiatives that we mentioned earlier, like the PMA 2.0 program.
Exactly. That program, along with others, it helps to make homeownership a reality for more people. They provide subsidies, tax benefits, and different types of financial assistance.
And LIC Housing Finance is participating in those initiatives.
They are.
That's good to hear.
They've been a key partner in making those programs successful. In fact, their investor presentation actually highlighted their efforts to reach out to underserved communities.
Oh, really?
Yeah, and they're even providing financial literacy training, so it's not just about giving them the loans, it's about educating them as well.
Yeah, so they're really trying to equip people with the knowledge they need to make smart financial decisions.
Exactly, and they're offering specialized loan products that are designed for first-time homebuyers, people with lower incomes. They're really trying to make it more accessible for everyone.
So it sounds like they're going above and beyond just participating in these government programs. They're taking their own initiative to really promote financial inclusion.
Absolutely. It's not just about handing out loans. It's about creating a support system that empowers people to build a better financial future for themselves.
That's awesome. But it brings us back to something we talked about earlier.
That tension between the traditional institutions and those fintech companies.
Yeah, and how fintech can play a role in all this.
Right, because they have the potential to really shake things up, right?
So how can fintech help with financial inclusion, especially in a country as big and diverse as India?
Well, they can overcome some of the traditional barriers to financial access using technology.
So give me an example, like what are they doing that's making a difference?
Well, mobile banking and digital payment platforms, they've reached people in really remote areas, people that didn't have access to physical bank branches before.
That's a huge deal.
And we're seeing these alternative credit scoring models that can help people who maybe don't have a credit history yet.
Oh, okay. So it's not just based on that traditional credit score.
Exactly. So it opens up opportunities for people who might have been excluded before.
That's cool.
And you've got these online financial literacy tools that can help people understand their finances better,
Yeah, that's crucial.
make smarter decisions.
Okay. So fintech is basically complementing these traditional institutions like LIC Housing Finance, it's reaching those people that they maybe couldn't reach before?
Right, and it's not just individuals, it's small businesses as well.
Oh, okay.
Fintech can help them get access to credit and other financial services that they need to grow.
So it's really about using technology for good.
Yeah, making a real difference in people's lives.
That's great. But with all these advantages, surely there are some downsides as well, right? We can't just gloss over the potential risks.
Oh, of course not. There are always going to be challenges and risks associated with any new technology. Things like data privacy, cybersecurity,
Yeah.
algorithmic bias. Those are all really important concerns that we have to
Well,
address.
so it's about finding that balance, right? Using technology to promote inclusion, but also doing it in a way that's responsible.
Exactly. It's about protecting consumers and making sure that everyone benefits from this innovation.
It sounds like it takes a lot of cooperation.
It does. It's a team effort, you know?
Yeah.
Policymakers, regulators, financial institutions, fintech companies, everyone has to work together.
That's a tall order.
It is.
But it sounds like we're moving in the right direction. Even though LIC Housing Finance isn't solely focused on financial inclusion, their work combined with these government initiatives and the rise of fintech, it's kind of a hopeful picture, isn't it?
I think so. It's definitely encouraging to see all these efforts coming together. It shows that financial inclusion is not just a nice to have, it's a key driver of economic growth and opportunity.
Well, I'm walking away from this deep dive feeling optimistic, I have to say. We've covered a lot of ground today.
We have. We looked at LIC Housing Finance's financials, we talked about their approach to risk management, and we explored the bigger trends shaping the financial landscape in India and even globally.
It's been a really insightful conversation, and I hope our listeners got a lot out of it.
Me too.
And if you want to learn even more about LIC Housing Finance, I definitely recommend checking out their full investor presentation.
It's full of great information.
Yeah, lots of details, insights that we didn't have time to cover today.
And be sure to subscribe to the deep dive for more in-depth analysis of these complex topics. We're always diving into something new and fascinating.
That's right. Until next time, happy learning.